We're going to head back to Monte Carlo. Shireen caught up with Mark Weinberger, the global chairman and CEO of EY. She began by asking him about the good set of jobs data that had been released today in the United States.
Well, global growth is certainly going in the right direction, but it's like the airplane's moving down the runway. We'd like it to take off. So it's growing very slow. And it's fragile, and it's dependent on the rest of the world. It's dependent on the strength of the dollar. It's dependent on whether or not people think they're going to raise interest rates. All these things come into play. That uncertainty alone is causing the growth to be slower than it could be. The good news is, of course, interest rates remain low, inflation is low, we haven't had a problem there. Job growth is growing, we saw from the monthly report. Wages have come up a little. So I think we're going to see some stable short-term growth, but not where it needs to be.
So what's the possibility now of the Fed perhaps preponing its interest rate decision, or do you believe that it will stick to its stated objective at this point in time?
It's 50-50.
It's 50-50, yes. Well, that is the best that we can say at this point in time.
I will say this. I think one of the major factors will be what happens to the U.S. dollar. If the dollar continues to stay strong, it'll be very hard to raise interest rates. I think they'd really like to raise the interest rates. They've been talking about it for so long to prove that they can do it, even a very, very small amount, so that they'll be able to send a signal to the markets that they are serious about it.
You know, we just talked about some of the global factors that investors are looking at, and of course oil is the other one, and we've just heard from OPEC today they're keeping output as is. The Qatar oil minister says that $100 prices are, you know, the time for $100 prices is over. What do you make of the oil situation, and how is that likely to impact growth?
Well, it impacts different countries' growth very differently, of course. So for in India, it's a very positive. For the commodity countries, it's very negative. For the U.S., it's very mixed. It certainly has hurt jobs in the short term. It's made it more expensive for some of the shale oil to be pulled out of the ground and to brought to market. But it also has been like a tax cut to many consumers who are out there buying gas every day. So it really has a mixed effect depending upon where you are in the United States. But again, there too, the volatility that it provides and that uncertainty just causes everyone to stop and think longer before making an investment. So that can't be helpful. So
when you talk to investors at this point, what is the #1 concern?
In the United States?
Yeah, when we talk about whether it's the U.S. or global growth.
I would say the #1 concern is what will happen to currencies when the interest rates do begin to come up, because that will significantly affect currencies around the emerging markets, and certainly with the ECB moving in Europe the other direction than the United States, you have very different big parts of the world economy moving completely different directions. That's going to cause very much volatility. That's a question mark. The other question mark would be, I think, always just the geopolitical uncertainty around things like Brexit and these things that are coming out of left field every day, it seems, to cause more questions as to whether the business environment will continue to move in the right direction or start to go backward.
But what do you make of the India story today?
I think the India story, if I go around the world, it's probably getting the most attention right now, along with Africa longer term, for a relook at investment. And I think you're right. There was some perhaps over-optimism about how fast India could change some of the policies. But if you look what the Prime Minister and particularly the Finance Minister have been able to do, and really move and address corruption, go and address opening up some industries to foreign investment, going and putting in these new plans for investing in India, they're moving in the right direction. Of course, the question is whether the upper house is going to prevent some of these policies from moving forward, and that will take time.
You continue to be as bullish about India as you were 12 months ago when we last spoke?
I'm a long-term investor, and I am very bullish about India. I really do think that over time, it's moving in the right directions. Over time, it's going to increasingly provide the infrastructure necessary to have that growth we're all waiting for.